-30. Sell. Okay? I'm jumping in.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Welcome guys. It is Friday, August 16th, 11 a.m. Eastern. Thanks everyone for joining, and we're going to take a look at the markets, how they're moving, and we're going to go for the next couple hours and see how everything develops going into the close and going into the weekend. So happy Friday, Juma Mubarak. Thank you guys everyone for joining. I appreciate everyone on our Zoom call. Thank you guys for joining. I know it's been a busy day for you guys. We had London, we had New York, and now this is post New York. So again, don't spend too much time in the markets, guys. Get your daily goal and get out of these markets. So welcome, Mats. Good morning, Luciano. Welcome, Daniela. Welcome, Mohamed. Welcome, Akon. Welcome, IC. Good morning. Juma Mubarak to you too, brother. Franco, welcome. Yeah, I was talking about the risk management, Franco. So Franco's saying, hey, everyone, been there, listen to that. I swear by it, guys. I'm telling you the honest to God truth. Trading is all psychology. So if we've hit daily goals, not just today, any day, if you've hit your weekly goal, exceeded your weekly goal, this goes for everybody. Please, guys, let's get the psychology of earning that money and get out of these markets, and let's learn how to compound and grow these accounts, and then everything will start to make sense over you put more practice into it. Then weeks will turn into months, and months will turn into quarters, and eventually quarters will turn into years for you guys, and then you're going to start to master the trading game. So it starts small, guys. It starts with those little incremental moves just to teach your brain, if whether it's we win $5 or $10, it's just teaching your brain how to get in these markets and get out. Soon those $5, $10 days will turn into maybe possibly $50, $100 days, and soon those will turn into maybe $500, $1,000 days. Okay, guys, so I know you guys are really working on this. Dave tells me how you guys are doing. And I'm like Santa Claus. I know everybody how they're performing. So please, guys, take it serious, okay? And I know you guys are doing really well. So, Mike, can you ask a question about risk management? And can you do it with the mic off? Yeah, we'll do it. Let's just get started, Mike, and then I'll take your question. Absolutely, I encourage that, guys. If someone wants to ask questions, unmute their mic. That's awesome. Thank you, Mike, for stepping up. I appreciate it, and I'll get to you just once we get going. Okay. Thank you. Rob, thank you for joining. I appreciate you. Guys, shoutouts to Rob Mack in our Forex channel on Discord. He's in there grabbing a lot of pips on GBP USD and cleaning up house over there. So I encouraged everyone on our snipers in Discord to go in there and start to also look at some Forex pairs, okay? It's not always about commodities and indices. There's a lot to do in these markets. Okay, so welcome Conrad, Aaron, everybody. Guys, thank you guys for joining. I appreciate all of you guys. Joel, comma days. Good. Yeah, remember back in the day we were talking about comma days? So those are also very important days. And everyone on YouTube, I appreciate you guys as always. Tony Gold, yes sir. Thank you for joining. Juma Mubarak. Thank you, Tony, for joining the team. Wow, Tony, you compounded $14 into 463. That's unbelievable. I tell people how hard it is to scale small accounts. That's just again go by the percentages and everything like that, and envision yourself doing those type of percentages with a bigger account. But that's respect, Tony. Good job, man. Robert the Macedonian, thank you for joining. Robert, I don't know if that's just your name or you are actually Macedonian, but my parents were born in Macedonia, in Bitola. And I was just there visiting. We were in the airport there just a couple weeks ago. So thank you for joining. Double R, thank you. Good morning. You're out of the markets, but good luck. Thank you. Yeah, hopefully you hit your goal and you're out. Carlos, welcome. Welcome, bro. Golden Ways, thank you for joining. Appreciate you. Yeah, I was just talking about that all-time high gold at 2,500, so we'll talk about that. It just tapped exactly 2,500 and 25 cents, and then you see the big rejection up there. So welcome, guys. Everyone on YouTube, thank you, guys. Okay, so let's get into this real quickly. Let's just start off with Forex Factory. Okay, so we've already, you see, yesterday was more of a busier day with news wise. It was filled. Today it was a little bit lighter on the news, not too many red folders in New York, so could have just been a normal trading Friday. And we know how Fridays do tend to trade, can be a little bit choppy, can be tough to trade for some traders. So please just navigate appropriately on days like this. Okay, don't over leverage, don't over risk, don't overtrade. It is a Friday. You should always be a little cautious on Fridays, because traditionally this is the day when most retail traders, I'm a retail trader just like you, and we tend to make a lot of mistakes. I don't know what it is. I'm trying to dig into this and understand why we tend to do this, and we tend to give away all of our profits on Friday. I think it has to do with the weekend. I honestly think it's like that psychologically. Like, I'm not a psychologist, but I'm gonna go to a psychologist and pick a brain of a psychologist and figure this out. Why do retail traders tend to give back and have a disaster on Fridays? I think it has to do with going into the weekend, want to make that extra money going into the weekend, and then we end up going against our plan and doing a lot of silly things, and then we start to regret it on the weekend, and then we start to open up the next week on a Monday on a negative note. So please, guys, this is probably the biggest mistake that retail traders commonly make. So let's start to fix this. And it will help you over the long term, in the long run. You will thank me later on and say, Ron, it really does help. Even taking a day off on Fridays is also very helpful. Okay, that would be ideal if we can trade Monday, Tuesday, Wednesday, Thursday, and then give ourselves a long weekend in a nice realistic weekly profit goals. So that would be perfect for all of us. So we had a light London session. There was one red folder, 2 a.m. pre-London, our UK GBP retail sales month over month, and then we came into our North American session. A lot of Canadian news about housing, foreign securities purchases, manufacturing sales up in here in Canada. We had some US building permits and housing starts. So again, it's all about housing over here. Not too big significant folders. They're yellow, low impact. We had Wall Street market open. We also had some British news in Wall Street when it started. 10 a.m. we had our every single Friday morning at 10 a.m. we have our University of Michigan consumer sentiment report. And inflation expectations were today. So we have at 1:25 p.m. Eastern this afternoon, we have FOMC member Goolsby speaking. This will probably be when we kind of just wrap up the call. But if you are trading into the end of the day, especially power hour, the last hour before Wall Street closes, 3 to 4 p.m., be very careful, okay? Because could get a little volatile in there, and the end of the week has options expiring. There could be a lot of volatility because swing traders could be exiting positions, going into larger positions to hold over the weekend. Scalpers and intraday traders could be looking to get in and out and in and out. So it could be a little bit of volatility. Okay, so just again navigate that appropriately and also have a plan going in if you are going to trade into the afternoon. Maybe just allocate a certain amount of risk that you're not affecting your entire account. And if you lose that, for example, you risk 0.2%, you're already up maybe 6% for the week. I'm just throwing some numbers out there. Maybe that's all you want to allocate for the end of the day. So if you lose that 0.2%, you still have locked in your weekly goal and you're not doing anything silly. And then you're just practicing to see how it trades in the afternoon. Okay. And then next week when we get started, we'll review the upcoming week. Earnings this morning, not too big of any big names. We had Madison Square Garden Entertainment Corporation over here. CINT Inc. and Flowers Foods, no big names. Okay, so, and then after hours, I believe we have nothing in the after hours. Friday afternoon, and markets are closed. Okay, Discord over here, guys. We send out a few signals. This was one this morning that came out for a sell on Dow Jones at around 40,500. So this is how the chart came out. We're looking for volume below 40,500. Ideally, we'd like bodies to close below, maybe retest this and push down. Depending on the time frame that you're looking at. So then we start to see it break down on the 15-minute candle where we get a 15-minute body completely close. Some traders, again, break this 15-minute candle down to a 10-minute, a 5-minute, 3-minute, 1 minute, if that's your style of trading. But if you're just following the 15, you had your body close, open, small rejection, and continue to push down. So maybe this was your body that you started sell. The total move here, the two bodies, are about 80 pips, but you can enter on this one as well. You could, if you miss this, you could possibly wait for maybe a pullback up until this fair value gap and maybe gets rejected just under 40,500, and then you can maybe enter on a retest. Okay, so and then let's just look at the commodities real quick. There's a setup here on gold to sell gold. Right off of pretty much the all-time high here, 24.98.96 area, and we've got a nice rejection out of there at that all-time high, nice rejection wick, and then a big body candle start to push down. And we're going to go into top-down analysis looking at gold, and this is pushing down from the all-time high for approximately 200 pips right now. So always pay attention to all-time highs, daily lows, you know, those areas, and just be careful at those areas. Okay, that's where we have to be very patient when it's approaching those levels. Okay, and just some news. Yahoo Finance again, guys. I don't know about you guys, but I'm addicted to news about the markets, about the economy, about everything. Like, I don't know over here, guys. I think it's Kamala Harris. They have the Democrat convention, I think, this weekend in Chicago. I don't know how that's going to affect the markets opening up next weekend, but I think it starts Monday. I could be wrong on this, but they have the Democratic convention. Could affect the markets next week. Maybe it doesn't, but maybe we pay attention to this a little bit. And then just looking at the markets, they're kind of flat today. So we got the S&P is negative 0.1%. Dow we're going to look at is pretty flat, negative 0.06. Nasdaq is flat, negative 0.2%. Russell is flat right there. Crude oil is the one that's down today, negative 2%, and gold, we all know, pushed to the all-time high up here, up 1.36%. The big names around here, Nvidia, you know, Tesla had a big day yesterday. So everything is just kind of consolidating this today. We don't see any big names or big securities really taking over the markets. So when I see that, then I know it could be a slow, choppy afternoon. I gotta use proper risk management and go into the markets without big expectations. Because look at our big major securities right here, how they are trading. Okay, and then there is news on whatever you're looking at. If you want to look at Amazon, anything, U.S. equity funds see biggest weekly outflow in 2 months. That's important over there. So there is a lot of news over here you can read. And finally, this is our free Telegram channel for all of you guys on YouTube. It's pinned at the top of YouTube. I highly recommend that and suggest that you guys join this free Telegram. We do give out free signals in here. We show the signals that we do provide, the before and afters, show you what our trading schedule, our live trading schedule is. And just some trades that we take and also what our members take in here. And just showing you what we do here so you guys understand. If you want to join the team, you can follow this for a couple days, couple weeks, couple months, and then get an idea of what we do and then join the entire team with us, and we welcome you guys to join. So here's our website, stocksnipertrading.com, and thank you everyone on YouTube for all of the subscribes and the likes and sharing our videos and things like that. Okay, so Mike, before we get started charting, do you want to ask your question about risk management? You can raise your hand if you want, Mike. I'm not trying to put you on the spot, but if you want to ask before we get started, or we do the charts and then you ask, it's up to you. Sure? Yeah. Do you know how to raise your hand in the Zoom? And then I can unmute it, or I can find where you're at. 1 second, guys. Mike, can you unmute now?
Yes, I can.
Hey, Mike, how are you?
Good, good. How are you?
Can everyone hear Mike, guys? Can you guys hear him on YouTube and everyone on Zoom? This is Mr. Mike. Mike, how are you doing?
Not too bad. I had a pretty good morning with Dave and
Nice.
this session.
Nice.
So, but my question is, just so it doesn't take too long,
Yeah,
and this is why I wanted to ask it rather than type it in, has to do with risk management, and I actually trade futures. And for anybody that does not trade futures, you deal with contracts, not lot sizes.
Mhm.
So I always have an issue, like when I'm doing risk management. Let me preface this too. Is I also do I'm gonna whatever you call prop firm.
Mhm.
So you have to pass a challenge. So even though it's a $50,000 account, you only have about $2,400 to play with, because they kind of cancel you out after that. So and you have to make, I think this one I have to make 3,000 to pass it. So I guess my question is, with futures you have micros and then you have minis.
Mhm.
For instance, for NAS, a mini, one contract in a mini is $20. So
Right.
if it moves like one tick, I don't know what I guess point or whatever, you make $20. If you do micros, it's $2. So if it moves one, it's only $2.
Yeah.
So first of all, I hate losing,
Yeah.
and that's part of my problem. And I think the problem is too, for me to make a stop loss large enough to cover, like say a lower low or a higher high, especially when the minis, it would almost blow the account. You know what I mean? Because sometimes the stop losses, like when I see you guys put a stop loss in, it's huge. And if I did that in futures, I mean, it could be literally like $1,000, $1,200 stop loss. And if it goes that direction, I'm done. And then with micros, it might be, $200 or $300. But the problem with the micros is it would take me forever to finally pass the challenge, especially in the choppy kind of market where it's going sideways, because you make $10, make $2, lose $5. You know what I mean? It just goes back and forth. So I don't know if it would be a problem, but what I do is I do the minis, because you only have to move like 5 or 10 points and you can make like $500 or $600.
Mhm.
But then that gets me in trouble, because if it goes the wrong direction, now all of a sudden I lost it. So there goes the risk management, because I have a really, really tight stop loss, because I can't lose that much, because I'd end up blowing the account.
Mhm.
So I guess do you take like the micros and you do like the huge stop losses and you just take forever to try to pass this thing?
Okay, so first thing, I'm going to be honest with you, Mike. I don't use like a prop firm when I'm trading futures. So,
Okay.
like I put my own capital in there, so maybe it's a little bit different. But what I would suggest with the prop firms, if you are like, you would go with the micro sizing, and can you compile micros? Like, can you add 5 micros on one trade?
Yeah, you can do like multiple contracts. Like you can do 5, 10. I think I can do up to I'm trying to think with micros. I think I can do up to 30 contracts. But what's really strange with futures, and maybe I just haven't figured out how to do it, because I know when I did Forex, like when you did multiple, like you say you put in a trade and then you put another trade in a pullback, it'll show it as 2 different trades. Well, with futures, it just adds more contracts, and it's much more difficult, at least I haven't figued out, to get out of a contract. Like you say, take a little bit of profit off here. you kind of have to like sell the contract or sell two contracts.
Yeah.
But when I'm using
Are you
TradingView,
are you trying more like scalping, or
yeah.
maybe you should ideally look for higher time frame and more swing positions and hold the trades longer and look for a larger win, and maybe that, and then open up your stop loss a little more, by using the micros and allowing the trade to breathe a little bit more, and then go to a target. But you would have to focus on the higher time frames. I would get away from the lower time frames and focus on, start off maybe with the weekly analysis, move to your daily, and then stick with the 4 hour positions and look to hold longer with the micros. And you can make a little bit more profit, but you're not going to get stopped out and like lose these prop firms or anything like that. You give it a little bit more room to breathe with the micros. I would, in your situation, I would recommend looking at higher time frames.
Okay, maybe. Well, I know like the prop firm that I'm dealing with, they close all of your accounts once the markets close, or like 10 after 4 Eastern time or whatever. So I couldn't do like overnight trading, like a daily thing, but maybe like a 15-minute.
15 minute, hourly 15 minute. So
Yeah.
like I don't know what time of day you regularly trade at, what session you do, but are you
Yeah, it's
more
New
New
York.
York? Okay, so
Yeah, I live in
then
Tennessee.
yeah, so
So
when you start your analysis, start off with see how the Asian session was moving. The futures starts at 8 p.m. Eastern and then moves into Tokyo, and then see how that liquidity moves into Europe in London, and then start to chart maybe London's high, maybe the Asian low, and things like that, and then follow the 30-minute, 15-minute time frames, and then see how it comes into New York, and maybe that will allow you to take some trades, and you have more than enough time till the end of the day to either take profit, or maybe you might get stopped out. But by using the micros and giving it more time to develop, I think that's how you should be trading these future prop firm accounts, with those lot sizing. That's just my opinion. But again, Mike, I don't use a prop firm. Maybe I need to buy a prop firm for the futures, and then I'll test it out and see myself. But like I trade with my own capital, so it could be a little bit different than the prop firms. Like I don't have those restrictions or rules and things like that.
yeah, they do have a lot of rules.
But that's what I
But
would recommend. Maybe someone else in the group can make some recommendations. Does anyone trade with any futures prop firms and can maybe suggest something for Mike? My suggestion is maybe just focus on the higher time frame. So you're not necessarily scalping. You're
mhm,
more intraday trading, and then you can open up your stop loss a little bit more, allow the trade to breathe, and then give yourself a bigger target for a bigger profit. But if you do get stopped out, it's not going to like be detrimental or blow up your prop firm, or lose the account.
sure. Okay, yeah, because that's a lot of times my problem is I have too tight of a stop loss, and then I'll get stopped out, and then it'll actually go the way it's
Yeah, so
supposed to, and I'm kicking myself.
so it's not working. That strategy right now, like between me and you, it's not working. So maybe we
Yeah,
have to modify it. Maybe next week try higher time frame and the micros, and see if that will
perfect.
help you out.
All right, well, I appreciate it.
Yeah, no worries. Good question, Mike. Thank you. I appreciate that.
Sure, thank you.
Okay, thanks, guys. Okay, so everyone, we're going to get into it. We're going to look at gold, and then we'll move into US 30 Dow Jones. Um, so what we're going to do is, right now, this is how gold is moving on the 5 minutes. So we had this big green candle push the market all the way to all-time high up here, 2,500. And then since then, we've been making a lower high, a lower low, lower high, new lower low, and we're coming right back up. So maybe it's going to consolidate here. Maybe we'll push back down to test this block over here, 24.82, or maybe we're going to push a little bit higher to 24.95. Maybe attempt again the all-time high. So let's go to the higher time frame. Let's start off with the daily and work our way down. Okay, so Mike, this is like kind of for you, like how I would start off with the daily, and then you know how I go hourly, 5 minute. Maybe you start off daily and then bring it down to the 4 hour. Maybe then you look at the hourly, so then you know exactly how it moved in the futures, 8 p.m., 9 p.m. You know how pre-London moved, 2 a.m., 3 a.m., and then you go down to maybe the 30-minute or 15-minute to take your trades and set up stop losses and things like that. So that would be my recommendation, Mike, for the way to trade that prop firm in the futures. But okay, so this is our daily. We have a big bullish daily candle. Remember our all-time high zone that we always were looking at for the last few weeks, where I had this like red block up here. If I continue to stick with this theme, now we can see that we impulsively broke out today for a new all-time high, 2,500 on the dot. So that is our high of the day and our new all-time high on gold. So for you guys that said it was going to go to 2,500 months ago, congratulations. In fact, we tapped in there, and so far it's getting rejected off of there. But this daily candle is going to close in 5.5 hours. So whether you're trading this afternoon or you're not, maybe just pay attention this weekend as to where this daily candle will close. Will it close above this block? And maybe we can flip this block green going into the weekend, and maybe there still might be some upside potential for gold to go a little higher, depending if anything develops over the weekend. That's a lot of times when things develop, Saturday and Sunday around the world, and that affects these type of securities like crude oil and gold. So we'll see what's happening with that. We have good support being held down here that hasn't really been broken. So it is continuing to build off the bottom. It is making higher lows on a higher time frame. Right here was a higher low, big bullish engulfing candlestick, pushed the gold all the way up there. So this was last week, Friday, and then we started the week Monday with that big bullish push, and then it rotated right back down. But you see how it's still holding this area. Like if I look to the left of the chart now, this is where kind of we can put the pieces of the puzzle together. Right here was a prior all-time high, so we connect it with that wick. We bring it across into there. We can see that here it did impulsively break out, but again, impulse. We have these on the 1 minute, 5 minute candles, and even a daily candle can impulsively break out, but no follow through with the volume to close up there. So then it came back down, and then they pushed it back down. So therefore, that box with the volume below, I make it red. And then I continue with the same size box. I don't change the box. I've already measured it over here in the past, and I just continue to bring it into the future. And then with the volume above, I just flip the color of the box green, and then you can see when the pullback came. I know it's already happened, but still, if we did this in the past and we did it into the future, you would see exactly how it came right into the green box. It tapped it, got rejected, and continued to follow through for the new all-time high. So I'm going to stretch this again into the future. So maybe if gold retraces back down here next week or next month, we will be waiting in this block to see if the buyers are pending in here. If we lose this box and it closes below here, we flip this box red, and maybe we're going to push back down to here. If we can't hold this one, there's the next block below us, below 2,300. So I can continue to do this, but I think it's going to be just a waste of time doing it down here when we're all the way at the all-time high right now. But if you want to put more and more zones on your chart, and you don't change them like me, I delete them every single day because we start fresh. But if you guys want to keep them, you can certainly do that, and then you just like kind of modify them. So let's follow yesterday's daily volume and then see how we moved into today. So yesterday it opened. It was technically bearish at the start of yesterday. It came down right into the top of this green box around 2432, held, came back up to where we opened. It had enough bullish volume to come all the way up here, engulfing Wednesday's midweek volume. But then when it came up there was some pressure to push down, and then it came back down. It closed with a bullish body, okay, not as bullish as it would have closed near the high, but still with some green bullish volume, kind of like a neutral candle right in the middle. And how did we continue to move? We closed right there. We opened today with a slight pullback, again trading into about 50% of yesterday's volume on that daily candle, just a little lower, and we caught a bottom, higher low. So this is like an area of point of interest on the daily for me. So this is where I do place like a yellow line. And we did this yesterday. The reason being because over here, you see the body, the same area. And then that's where the volume is technically closing right there and opening right around 2447, 2450. And then we came down to it today, but we didn't technically touch it. So it is just a higher low and continue push. So just this little area right here, I can see that they're in the depth of market, like just by looking at the candlesticks, that there is a little bit of support right there above this green box. So again, I just make this one go into the future. So I'm now going to test. If it comes down red, I expect the buyers to be somewhere around here before this big block gets activated. Okay, and then we came right back up with big bullish volume. We took out all of this structure, all of these where we technically got rejected there, rejected there, rejected there, rejected there, and rejected there. Big body volume broke through all of this, and we came to our all-time high, daily high, 2500, and now it's technically getting rejected a little bit. So inside here in the red box, I've got a wick here, a wick here, a wick here, somewhere around here. I'm going to try and get as many touches on these wicks as I can, just in case we pull back maybe into this area. So right around there, I get a little bit of that wick, I get that wick, I get that wick. I just missed that one by a few points and then cut right through here. But more importantly, it's about 50% of the red zone from the top to the bottom. Half of it is around there. So if gold sells off this afternoon, maybe it will come down and trade into here around 24.78, and maybe the buyers will be holding this, or this is where the big tug of war will be to see how they'll close it. Will this volume close above the all-time high wicks, prior all-time high wicks, or will they push down and close around 50% right here, and then we judge how we move next week? Okay, so daily candle is technically bullish today on gold, but we are starting to get a little bit of a rejection at the all-time high. So let's break it down to the hourly now, and we'll look at on the hourly where the big move was, what time of day it was. I see it was just trading sideways around here. So this is our Tokyo session, and then we start to move right into there. 3 a.m. I always pay attention to 2 a.m. and 3 a.m. Always, whatever security I'm trading, because that is a big session that opens up. That's Europe. That's London market open. So 3 a.m. was bullish. Then it kind of traded sideways with these doji candles. 4 a.m., 5 a.m. But it's still technically making these higher highs and higher lows with a lack of volume. 6 a.m., 7 a.m. a nice bullish candle pushing it, but then you see here, so we have a little bit of hourly area of structure here too. So every single time frame of a candle builds its own structure. We just looked at the daily just right before, and now we're looking at the hourly. So right here, this is when the market rotated all the way up, and then you see, yes, there was that impulse break, but more of the volume was concentrated right here where they closed it and where they opened it and they pushed it back down. And then you see how we're driving right back into here. They rejected it, rejected it, rejected it. Now we got green volume closing above this line, and that's where that big move started. So with hourly, the only thing I do is I use a white line to suggest hourly. So again, over the colors, purple means high or low of the day, whether it's at the high or the low, it's the high or low of the day. Yellow lines on my chart are to show me a daily point of interest, a critical daily area in my opinion, and the white lines are other critical hourly positions. So then I bring it down and I put more emphasis on the purple lines, I put emphasis on the yellow, then I put a little bit of emphasis on the white, and then the smaller time frame, my red lines are for my scalp in my 5-minute lines. Okay. And now I can see big move 7 a.m. followed at 8 a.m. COMEX market opened, some news in the market, saw gold continue to push. We saw a little bit of a sell on the US dollar at that time, and then Wall Street opened right here. It was initially red, came into about, again, just above 50% of that volume of that candle, pushed for the all-time high. So the all-time high was 9 a.m. Wall Street. We got rejected, came back down, closed here. They gapped it up, but it gapped up. There's a red bearish engulfing candle ignited. It didn't really push to the upside to attempt the all-time high again. It was a big red candle that tested down in here, that 50% of the red box right there at that daily position, and it came right back up, still closed red, and they pushed it right back up again. But you see now we're below 50% of the red candle. I know it's a lot of white lines, but just for reference, I'm going to place a white line right there, which was half of that red candle. And then you see the retest we're having right now is about approximately 50%, and we're pushing down. So will the sellers have enough momentum to push it back down and test this yellow line and maybe push it down for a new lower low on the hourly? Or are we going to kind of consolidate here and the buyers will bring it right back up, attempt this hourly resistance, and maybe we can try again for another attempt at the all-time high, or we're just going to kind of consolidate and trade in here for a little bit this afternoon. Okay, so right now this is kind of a move on the hourly where it came all the way up, and then now we're getting our leg pushing down, our pullback leg pushing down. This is kind of like a counter from the overall bullish move. And then now maybe we gotta be patient to figure out where's going to be the neckline. Will it be somewhere around here? Will gold continue to come back up? Will it be a rejection right there, rejection right there? Will it be a lower high and then they really, maybe this afternoon, then they push it down? Or will it continue to go close above here, retest this, and then we take out this new all-time high and we're continuing to drive? So we're at this critical area where maybe we got to figure out where it's going to consolidate or form a neckline in here. Okay, and then on the 5 minutes, if we do want to do some intraday trading or scalping in here, like again, now we can watch how they're moving. It came in here, kind of closed above, pull back, pushed all the way up to that hourly. So I can see now my 5 minutes, they've got some resistance right here, right below that hourly white line, into there, into those bodies. So I'm going to just draw this small red box. This kind of illustrates the 5 minute resistance that we have. I can see that it was an impulse break right there at 10:10, and they rejected it back down and closed it right there. And then you see the big body candle at 10 a.m. and we're still, the volume is below 50%. There was one impulse break, but no volume closing above this level yet. So if gold does come back up and actually physically close above here, then we're going to maybe pull back to the white line, which would now be hourly support because it's resistance right now. Maybe we flip this red box green, maybe it retests this, and then we're driving to take out this previous high in this body and maybe start to trickle up to that all-time high 2500 level. Or it could be like a fake out, just like this candle faked out. It could come break here and then come back down, and then we sell the market back down, and then we see that they swept the liquidity up there and they got rejected. Okay, otherwise it's going to maybe just trade inside here. We can definitely trade this zone if you guys want. Like, we can measure it, and then we ask ourselves, is it worthwhile from the top of the red box to trade back down to here? It's 60 pips. So you can see, like, this move coming down halfway from the top is about 30-40 pips right now. So it is a big range. It looks like it's a small range, but that right now is 45 pips the way how it's moving. What we can do is we can continue to maybe consolidate as much as we can here. Now I see this big green candle that started this move. Half of it is right around there, and you can see that I got structure, bodies right there and bodies right there and wicks right there, right in this 50% level. So if I draw like a line, I'm going to draw a line right here. Again, it's not going to be perfect. Sometimes it is, but you can see I'm trying to get those wicks. I'm getting that wick, I'm getting that body, I'm getting that body. Could I push it up and get those bodies? Yes, I can, but then I just kind of want to keep it in line with everything. And then it's still open close of this green candle. That's about half of it. And then I can see maybe there's a little bit of 5 minute structure right here, green, and holding. Okay, so I'm just trying to show you guys how we're trading at these levels of structure on the 5 minutes. This bigger red zone, I'll get rid of this so it doesn't confuse you, and show you what it looks like here. Okay, so right now on the 5 minutes, we're pushing down with this leg coming down. So below this red box, we came down, kind of caught a bottom. We're coming right back up. Could not have momentum to break this. Coming back down. Now, will it hold? And we're going to try and come right back up, or it's going to kind of be lower highs and they're going to attempt to try and break this. It could be an impulse candle that breaks. Maybe it catches a wick down there and then it comes back up and they fake out down there and it closes up here and retests this. Then it gets that injection and then we're continuing to go to the upside, or it will physically maybe close below here and then we'll see if it retests this and continues to drop. Okay, so there's various things that can happen. Obviously, I'm just trying to give you guys a few options what could happen. The best thing in my opinion is if you're going to trade on impulse and guess it's going to break or go to the upside, like this candle here, if you went in on a green candle before it closed, this is where now you got to think about how much am I willing to risk on an impulse candle. Are you going to go all in and say this is the candle, this is the one, but then if it gets rejected and dumps like that, you better be ready to handle the physical loss on that because you're entering on an impulse. So my suggestion to everybody, if you're trading on an impulse on any time frame, whether it's 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, daily, we don't know until that physical body closes where it will close. So anytime you're going in on any time frame before the body closes, you don't know what will happen up there. Yes, it could break. That was a good break for an impulse scalp, but the close of the candle closed right below structure and then they dumped it back down. So you got it, guys. You have to learn this. I cannot stress the importance of this. You got to manage your risk if you're trading on an impulse candle. And you also have to manage your risk on a candle that closes and retests. It's not 100%. If it closes up here and retests this, then we go all in, and that's sometimes happens live with us. It closes up there, retests, we go in, it goes up for a little bit, then continues to push right back down. So just because it closes and retests, that doesn't also give you the right to go all in. You still got to kind of feel out how things are going. How Mike said, you got to be able to manage your own risk, how far down you're going to place a stop loss, and so that you're not surprised if there is a pullback, and then maybe you give it some room to breathe. So you saw when I showed you this zone right here, it's about 60-65 pips. So if you're trading, either you're selling or you're buying these candles right now, and you're trading with a 10-20 pip stop loss, you could possibly get tagged out because there is a lot of range in here. It's trading larger volume than it normally does, gold in the afternoon right now. Okay, so let's continue to let it build. I'm going to add the Scalper Pro on gold right here. And we'll see. It gave a sell setup here just below that all-time high. It gave one right here, but you see how it continued to push right back up. So the Scalper Pro is just designed to help us look for setups, but you have to also use common sense when you're using this thing. Just because it says sell, that doesn't mean you just go in. You got to look for where the volume is closing. If it's retesting this area, maybe will it continue push down like this one, that body closed below, retested it. That maybe was a good opportunity off of the all-time high. We're getting a sell right now where it just pushed down that leg, but now it's coming right back up. So we'll see now, will it break this, get faked out and come back down? Will it actually close with volume above here? Is it going to push, squeeze a little bit higher? But right now it is trading inside here. Okay, so we will continue to watch gold over here. I'll give you guys the chart on gold, and then we'll take a look at Dow, and we'll keep them side by side, and we'll see how the markets are moving. Okay, Zoom chat, there is a trading view link for you guys. I just posted in the chat, and it is gold, and we will continue with Dow. So we're going to switch up the indices every single day when we trade together. So I believe Monday we started with S&P, and Tuesday we did Dow, Wednesday we did Nasdaq, yesterday I believe we did S&P again, and then today we'll do Dow Jones. Okay, so gold is just continuing in here. If you guys are in buys, it is still holding here. It is making higher lows, but let's see if it can penetrate through this 24.90.91 hourly resistance over here. In the meantime, I will be charting Dow Jones. This type of price action I'm not a fan of. I will be completely honest with you guys. When I see wicks on the top, wicks on the bottom, like all of this, I tend to stay away from this stuff. Like if I was just looking at this right now, I wouldn't be in favor of trading US 30. I like to trade more volume like this, where it looks just a little bit better to the eyes. This is real choppy and big range, so I can see how it's trading. This could get frustrating trading this. Like this is the type of price action that will piss you off when you're trading this. Like look at the sellers, they keep trying to sell, it goes back up, and then every time it goes down, it's coming right back up. Same with the buyers, it goes up, comes back down, goes up, comes back down, but it is still moving. But you gotta understand that it's going to be choppy trading this for the next little bit. Okay, let's start off again with the daily and move our way down. Okay, so we've had a strong push on the daily since it started. This was the all-time high, okay, for Dow Jones. So if we want to mark the all-time high, you certainly can. Right up there, draw a box and bring it across. So this area is the all-time high. Are we going to get back up there? Possibly. We're not too far away from it. Or are we going to get a pullback? And I can already start to see some critical zones on Dow right here. That was resistance. When that green body closed above, it turned into support. If I bring it across again, I'm walking right into that gap, into those wicks, and now we got volume closing above. So this zone is in fact going to be green on my chart. Okay, and then we had this kind of double top where it came up, all-time high, pushed back down, neckline came back up, got rejected, and then they pushed it, broke this neckline, pushed it all the way down to here. It came right back up, and then we started this week, Tuesday, Wednesday, and Thursday, big bullish days. So let's just follow our volume. Okay, so every single day we can see 50%, it didn't even pull back into 50% of Tuesday's volume. It continued to push for a new high. 50% of Wednesday's volume is right there, and we're still holding it. So it's slight pullback on Thursday, and we continue to drive and close near the high. 50% of yesterday's volume is right here. So I'm going to place a yellow line to cut that body in half, approximately right around there, 40,296, 300 level. Again, yellow line for maybe just allowing me to know that that's 50% of yesterday's volume. If we do in fact pull back in here, maybe this will hold right here. It will continue to go up. If we close with some daily volume below here, then we have the opportunity to push back down to here and test down in here. Let's follow today's daily candle. Okay, so we closed relatively like 95, 97% to the high yesterday. So very bullish day. The markets were really green yesterday on news that we might be getting that Fed cut, so seeing an injection of volume. There's also, I was reading this morning that there's about 750 million to $1 trillion of liquidity waiting to get injected into the markets at any day. So possibly next week we might see a big injection of almost $1 trillion. But maybe it's waiting to see if it's going to be a 0.25% decrease or a 0.5%, because pretty much everybody knows that the rate cut is coming. It's baked in, possibly, but how much? Will it be a 0.25% or 0.5%? And there's about $1 trillion waiting on the sidelines to be injected in the markets. So that could get us back to all-time highs again. So today we opened. It was initially red, and we stopped right there. So that is our low of the day. It is still above 50%. So purple for the low of the day. And I can see it's still above 50% of yesterday's volume. So you see this kind of gap from right here, the purple to the yellow line. This is kind of like what you guys call a fair value gap. That hasn't, there's a lot of pending orders in here that haven't been activated right in there. So what I do is I stretch this box into the future, because if it ever does come back down into here, then maybe these orders, pending buys, will be activated and take it right back up. But if we break through here and close below here, then this gap turns red. This could in fact turn to supply. Then we start to drop down into here. So this would be my first point of interest that I would be looking at if we drop down into here. So we can place like a yellow line at the bottom of that body right there to show that maybe this is, if it pushes down to here, there could be some support. If we want to bring it down to those bodies and kind of adjust it a little bit and play with this area, you certainly can. Maybe we can bring it right there. There's a body that kind of closed below there, closed right at the line, retested it. Coming over here, we closed above it and we retested the yellow line. Maybe we leave it right there. And then now going to the upside. So you can see it's completely building. This was a liquidity grab below this critical zone. So it came down and scooped all this up and we're building. So this may be like a V recovery where it came down 1, 2, 3, kind of 4 days and then recovered very sharp. So it initially came down and then there was that sharp recovery coming right back up. Are we going to come back up and test this big red body up here at 40,880? Are we going to fill those wicks right here and then hit that all-time high? Or is it going to kind of just, that's it, it's going to settle right here and then it will be a lower high and they're going to try and push it back down to break this block. If it breaks, might come back up, retest this, gets rejected, then we take out this yellow line and then we're coming down to this zone to test. And that's what might be where the buyers are holding down there and then bring it right back up. So I just tend to go from one block to the next block, from one line to the next line. That's just ideally how I trade, and I don't know, it makes it pretty simple for me, just watching, and then I put particular attention on the color of the line. So we came down there, higher low, still holding. The structure below us, the bullish structure on the daily, has not been violated, has not been broken. It's still being respected, and we push for a new high. We took out yesterday's high. We made a new high up here. So let's place a purple line at today's high. And when we got up there, there was an initial rejection, and it's coming down to trade right around here. So just now for some scalping, where we closed and where we opened, that's another point of interest. The 40,450 area, 453 to be exact, just plays kind of like a yellow line there. It is a point of interest because it did close there and it did open there today. So it might come back down to where the opening price was, and we'll see if the buyers are still holding the opening price. If not, we might start to trickle down from this yellow line and come all the way down to the bottom of the wick. But again, we might not come all the way and test the bottom of the wick. What happens if it just comes down red, red, red right there about halfway and stops right there? So that is an area of interest I will be watching halfway here. And then it protects the higher low. Let's say it comes down red, red, red and stops right there. And then the buyers continue to push it right back up. So at each one of these successive levels, I will be watching it on the 5 minutes. And then that's how I determine whether I'm going to be buying or selling, depending how it's moving or closing below these lines. If we continue to come back up to the daily high and we break out, where could we go? We could possibly go all the way to the all-time high, but there's resistance behind us. So we got to take it kind of candle by candle, or where we see more structure. So I've got a wick right there, a wick right there, a wick right there, kind of that wick right there. But more importantly, maybe these bigger bodies up here. So I'll just place like a line right here to give me, so I can focus on this area. If it does fill from the purple line to the yellow, then I know it's filled this entire area, and then that's where maybe where it got rejected and the volume closed at this area. We've got to pay attention to 40,850 on the dot. Okay. So technically, Dow Jones is bullish. We're getting a little bit of resistance, but could still on a Friday, could still squeeze up there. Let's go to the hourly to see how it's moving. Okay, so you can see we had the big green candles at 7 a.m., 8 a.m. yesterday on news, and we continue to drive. Hourly was, look how overbought it was. Like we talked about this yesterday, the S&P, NASDAQ, and Dow Jones. Look how long it was overbought. It was overbought from Thursday, 8 a.m., and it never broke over here until Friday, 5, 6 a.m. So you see how long they can keep it, and I'm talking, this is really overbought at 85. So if you were trying to sell, and I know some of you guys were trying to sell and you weren't successful at doing it, it's because just because our RSI indicator is telling us overbought, like even here it was overbought. If you sold here, it never really broke down, it kept pushing. So it's nice to use these indicators, but they do give a lot of false signals as well. Okay, so that's why I believe it's more important to watch when volume closes below critical levels, to maybe start to see when this body started to close below that daily area. That's when the red volume on the hourly started to drop, and then it got bought right back up. So there's our neckline, our big neckline. So we can see kind of came up one top, came back down. We're coming right back up. Are we going to come up and it's going to go down like a funky M and then break this, and then next week look how much we can drop and fill all of this imbalance in the market? Or is this going to just continue to drive and break and go higher? Okay, so what we got to do is last few hours, when did it fall down? 8 a.m. Wall Street picked it up 9 a.m. 10 a.m. we had that news. It was really like a range where it came down but never broke any lows down here. There's a body, a wick holding 40,442. We created a new high from here, still not taking out this area. So what I do is at the hourly and the purple line, my hourly kind of box is the purple line and down to those hourly bodies. And you can see how every time we're coming in here, it is getting rejected. Right in here. It came in, they rejected it. Came in, they rejected it. Came in, rejected it, pushed it down. We touched it again right there at 10 a.m. and they rejected it. Now we're coming right back up bullish again. But we have this big long wick, exhaustion wick to fill. And maybe are we going to pop a little higher? Or are they going to maybe come in here and again they're going to push this thing down? So let's watch how this thing is moving. We have about 7 minutes to go for this hourly volume to close. Will it close 50% above this yellow line? Then I know the hourly volume is above this daily level and could still continue to push bullish to the upside because there is some strength coming behind this. So let's go to the 5 minutes. Our 5 minute this was very similar to kind of yesterday's or the I can't remember, was it Wednesday, where we took a buy where it came down. And it was the one day with gold where I took the initial buy, I got stopped out, then I added another buy at the higher time frame level, and it came up, and then after the call it pulled back, but then it formed this exact kind of higher low, and then it continued to break out. So we're getting a very, very similar pattern as to that day. But this, again, yellow line, you can see how the 5 minute candles stayed below it. Here, this was that 10 a.m., that big hourly candle, kind of faked out, bring it back down. Now we're closing with some green volume above the yellow line. So I'm going to mark this area right here, and right here. This could be ongoing support on the 5 minutes. So if we pull back into this box right here, then maybe we might be looking for a pullback buy. For example, if it comes down red right into here, we might be buying this right back up. If it kind of maybe this afternoon pushes below here, we might get that sell to come down to here. And then I just take it, a sell from here down to the yellow line. First I measure it, okay? And then I see what exactly if I'm looking to take that sell down to there. That's about 60 pips to take it from here to there. But that's not always the case to just come down right down to there, because the 5 minutes also build structure in between this block, in between the zone. So what I look at is how the 5 minutes have created a little bit of structure. They created a little bit of support right there, then it turned to resistance right there. Again, it turned to support right there, and then it turned to support right there. So it might just kind of come back down to that red line right there. It might come down red, and stop right there at that 5 minute supporting level and then get a wick and go back up. So sometimes when I'm trading, yes, ideally I want it to come all the way down there, but I still have to respect this area because if you look at how the 5 minute candles were trading at this area, there was structure here. So then it's approximately 35 pips. So maybe that's where I take maybe 80-90% out of my scalp and then leave 20% running if it wants to continue to go down, because sometimes, you know, when we're scalping, you guys know this just as much as me, it comes down red right down this area and then it goes back up to come back up here, and then we kind of gave away 20-30 pips. Or it might just get faked out and do this and then all of a sudden go for your stop loss. So that's how I trade, guys. I know it's not like the style that you guys trade might be completely different, but I'm kind of like a zone to zone scalper on the 5-1 minutes, so it's a little bit different style I use. But I try to hold for the bigger move, but I know, and you guys know, sometimes that's not the fact. It drops and it goes back up. Then you gotta stomach the pullbacks, being in profit, going back to break even, maybe a little bit, now you're in drawdown, then it goes back down, and you guys know how it is. You guys are all traders too, so you guys understand the game. And then here too, you see right now how we're moving on the 5 minutes. Look at this structure right here. Like how can we not acknowledge this structure here, where it came down, stopped right down the 5 minutes, came back up, came down again, stopped right here. And then that red bar finally closed below, and then there was that little flag, and then the drop. So right now, our 5 minute candles are closing with the volume right above that. So if I'm looking for maybe a quick scalp to the downside, if I start to see it gets rejected up here near this bigger, higher time frame area, and it pushes below this red line, that's where I might be looking to sell to take it back down to this green box. But this is what I'll be using going forward. Is this red line. And again, I do the same thing. I measure from the red line to take it down to the green box. The total to the green box is approximately 40 pips, okay? But again, it might not come all the way down there because you see right here, there is, look at the structure right here. I know, probably some of you guys are probably like, Ron, what the hell are you doing? What are you talking about? But right here, you see how it just came down and back up. Then we closed below. You see this? This was a big green candle that came right up to that red line and they pushed it right back down. We just came up with that leg right up there and then they pushed it right back down. But now we're pushing. So it could technically go from here, red, and then come down and test this level. And that might be 5-minute support, and they might be holding the depth of market right there before it drops down to this green box. So that little scalp from this red line to fill there is about 20 to 23 pips. And then that's maybe where you go to a break even if you're in that, and we hope that it will continue to break and come down to our target of 40. And who knows, maybe we get a big red candle to start drop. But when it goes down to there, it could just come down and pick up that depth of market and go right back up. So that's when you're counter trading, guys. Like that's countering, that's selling this bullish move. That's why it might be one red bar, it might be two red bars, and you got a pip and dip. Unless it closes below with heavy volume, can retest this red line will turn into resistance, and then it continues to push down. But you got to know that, guys. Right now, if we look for sells, we're countering this big move. So it's still driving. So let's see what will happen when it gets up to here. It got rejected. That was that big 10 a.m. rejection. This is a big red box. Will it get up there? RSI now. Okay, so when you're looking at 5-minute RSI, now it's telling us this move is getting a little bit overbought up here. So maybe we wait to see. Will it tap in here, get rejected? Okay, so we'll leave these two side by side. Gold is starting to physically break out of here. Okay, so let's let gold close in the next 30 seconds. And then it is 12 p.m. Eastern. Okay, so perfect timing. We have a new hourly candle. Gold is approaching 24.90, that hourly resistance. And we're pushing on Dow Jones and going into the next hour. So momentum can continue to go to the upside going into noon, or can start to reverse. But we have a big bullish candle. Okay, let's follow gold as well, and Dow. Okay, so if it closes above the red box, I turn it green for the moment. Okay, so it opened near the high, it's ignited. So it should technically fill up and take out this high and drive a little higher, and maybe gold can fill up to that wick at 2494.60. So I'll just place a line here to show you, possibly coming right up to this wick up here where it got that big rejection there. Okay, it could see how it didn't even take out the high yet. Okay, so they're holding it down, and if they continue to hold it down, and the buyers are not accumulating, it will potentially come back to retest this green box here, 24.90. Do you guys have any questions about anything I talked about? Okay, and just please, guys, careful trading on a Friday. Don't do anything silly that you're gonna regret after the call, and it's gonna ruin your weekend. Okay, just please, guys, work on these things. And some of you guys might be saying, well, Ron, why are you not buying US 30 right now? It's a fair question. The reason why I don't want to buy it is because looking at it, I missed a buy right there. I could have taken a buy right there. It looks like I missed out on the party, okay? And I don't want to join the party late and then it pushes down. So this is where I got to be patient. And yes, I know that maybe I could possibly take a buy and it could go a little further higher, but the risk and the reward is just not there for me. Maybe it could get rejected. Maybe I could buy a pullback if I'm looking to buy. Maybe I got to wait it out for a pullback at a better position, or I'm just going to miss out on this move continuing to move to the upside. But for these traders who are in it here or here or here, they're loving it. But for me to start getting in right at the high, it's pretty difficult. Yeah, and Mike, yeah, you got it. Maybe it wants to drive back up to this red zone, and then I see what happens in there. gold is moving. Like gold is okay, so the markets are still moving. Our US dollar is dropping to 102.70 right now. We have a double top on S&P 500. So if you guys are watching that as well on the 5 minutes, I have it on another chart. So there's a double top right now at the resistance at 5,547.48 area on S&P. So if we kind of have a double top on S&P, then maybe we'll let Dow kind of melt up as much as it can, and then maybe look for a possible sell if S&P is pushing down. Maybe we'll look to sell down into here. Okay, so it did come up. We got now some consolidation, and there are these indecision spin top candles. Okay, so not my favorite to trade. Continue to wait, see how it will close in the next 90 seconds. Does anyone have any plans for the weekend? Anything exciting anyone is doing? If you're just relaxing, that's exciting too. You know, sometimes people have busy weeks. Algo, you're buying gold. I'm going to wait to see gold if there's a pullback into here, because there is still lots of resistance here. It could in fact push this down. Maybe I'll look for an opportunity to buy in here at 24.90. Oh, Aaron, yeah, my son is excited about that too. The new season of Fortnite. He's been telling me all about it. Yeah, practice your backtesting, Aaron. Perfect. That's good. Yep, optimize it. Gym, perfect. Staying healthy and gaming, absolutely. Rams Chargers preseason. Wow, the NFL preseason has already started. Man, so I know that September is coming real soon then. Okay, so if you're following gold, that is a big body candle. Again, just I'm going to take this red line from down here because we're nowhere near this level. So again, I'm going to cut it. Okay, just like you guys cut your steak, cut it in half. That big green candle, half of it is right there. Okay, so if maybe we push red now, we'll see if it can continue to hold 50% of that bullish candle. Maybe it might consolidate here and continue to take out that previous high wick and then trade into this area right over here. And sometimes when we're looking at bearish order blocks, see this body of this candle, how it came all the way down and closed right here, then they gapped it up and the wick is right here and they pushed it down. So I'm just going to highlight this area from the top of that body down to that wick, and if I bring this box across, I want us to watch and see the type of reaction that these buyers, if it does come in here, what it will get where there is these pending sell orders that haven't been activated in here. Okay, does that make sense, guys? I really want you guys to understand this principle right here. Forget about what's going on like the candle. Just understand here. Okay, sorry. And we're getting the rejection here on Dow. So it got rejected there. There's a kind of our tweezer top highs rejected. This candle is going to close in 3.5 minutes. Okay, so what I want to see is, will it attempt to come down here? Maybe physically close below here, and then I'll sell a pullback. Will it come down, go back up? But I will be possibly entertaining maybe a sell on Dow, depending how it develops here. But I'll let you guys know when I go in. Just talking about this as well. Okay, so this candle right here at 9:55 going into 10 a.m. You see how this is still red and hasn't been touched by a wick or anything in there? So that is kind of like a block that hasn't been activated. So it could be still pending sellers waiting to get activated. So if gold came right into there, maybe it would have activated those sell orders, and then that would have been where it would have pushed down. Okay, so right now it hasn't came in there yet. We still haven't even broken that previous high right here at 10:10. So it is a red candle. coming back down. We'll test in 50% here. So if we kind of just trap this area right here, we'll watch this area. Yento, do I consider a gap, fair value gap, as a point of interest? Absolutely, absolutely. Whatever you want to call it, guys, like let's not get caught up on all the names, but point of interest, absolutely. This is a point, whatever you want to call it, a point of interest that I'm going to watch to see. I'm going to place like an alert there, or if the buyers come in here, I know that this is where the sellers are waiting. I can see the candlesticks are telling me from this morning that's where they pushed the market down, and it still hasn't been. There could be still some pending sellers in there, but I'm still going to use caution. I'm not just it's gonna come in there and then just automatically close my eyes and hit a sell button and hope for the best, because it could cut right through there with green volume, and then all of a sudden it closes up there, and then I got switched that block green, and then it pulls back, and now it turns into a demand block, and all of a sudden it's squeezing the sellers out of there. So just everything with caution. Same here. I was looking to maybe possibly take a sell, but it still needs to continue to come up, maybe to get to our point of interest, our bigger block up here. Daniela, should I wait for Dow to push 41,400 to possibly sell? 41,000? Sorry, 41,400? What? That's higher time frame, or are you looking futures or daily? Okay, daily. Let's take a look. $41,000. Okay, daily. I would watch this area. Okay, if it comes through here, maybe watch this 40,800. But to sell all-time high, yeah, 40,400. But when it's coming up there, if we're coming to the all-time high, that's what could be coming with a lot of momentum, and it's squeezed for a new high. So you have to be very, very careful trying to short all-time highs. Doesn't always work. Like it worked with gold this morning, but doesn't always work like that. Okay, so you see the big rejection now? Okay, so they rejected it again. Again, it didn't close with big red positive volume. It came back up, now going down. So we've got 1 wick, 2 wick, 3 wicks. We've got some rejections. Again, it's green, so we've got to kind of let it play out. We got an inside bar, red bar, and green ignited candle. So this might be green and attempt to come back into this box, or it might just consolidate here and then push down to come down to here. Okay, so it's not ready to hit the sell button yet, guys. We have to be patient, and we got to continue. Maybe I'd like to see if it will trigger maybe a big seller inside here, if it can get up there. Gold is still pushing. Maybe we wait for it to see what type of reaction we have in this red box over here. And again, guys, I don't want to look to force a trade. It is Friday afternoon. I don't want to put us in a situation where we force a trade. So we see how the market is moving. Pretty choppy here on US 30. But still, let's just be patient. Yeah, you got your eye on that all-time high on Dow next week. Possibly we could tap into new all-time highs in the markets. Like I said, there's about $1 trillion of liquidity waiting to get injected. I think whenever that rate cut comes, whether it's 0.25% or 0.5%, will dictate a lot of liquidity coming into the markets, and it will possibly be buy-side liquidity. So we could definitely take out all-time highs. Okay, so how many rejections do we have up here? 1, 2, 3, 4. Now it's coming down. So this is maybe, when I see all those rejections, maybe if I want to get in, this could be like an impulse sell, and I reduce my lot size. It's kind of like a feeler trade, and then I test it out. Then if I get confirmation that it closes below here, then and get a retest, then I might enter again. But I'm just going to continue to wait it out because it's real choppy in here. If I actually get a red closure below here, then I'll be thinking more to sell. Okay, so again, it's coming up there, getting rejected. Remember what we were saying the other day. If buyers keep pushing it up there and there's a bully up there pushing you down, maybe the buyers are going to get tired of fighting this big bully up there. And then the big bully has acquired enough sell side volume that maybe we'll be able to redistribute it down here and hunt for the buyer's stop losses. But it's still filling up green. So we have to be patient. I know it's getting there for maybe to entertain a sell, but it's not there yet. And now gold is still bullish. Okay, so it hasn't broke down below 50% of that bar. With that inside red one, we have an ignited bar opening up with a new higher high. So let's see if it fills into our red zone. And if you guys are on buys on gold, congratulations. Like it is still pushing up. So you see, like from here, if it sells off, if gold sells off from like right here, it could come down. But you see kind of like our trend line. Our trend line is right at that green block. So it could just pull back like kind of red in here. And then that's it. It stops right there. And then those buyers are waiting to take it back up. So if you're looking for just like a short little scalp from here down to there, again, it's about 20 to 25 pips. Then you have to understand, or you just got to acknowledge that if it does come there, that the buyers could be waiting to bid it up and take it right back up. Okay, unless it physically closes below there, then it kind of retests this and then starts to drop back down. Okay, so and Dow is still really bullish. Okay, so what could be happening is a short squeeze. Like there could be a lot of sellers who are trying to continue to sell the overall markets, and the markets keep squeezing higher and higher and going after their stops. If you're a seller, your stop loss is probably inside here or a little bit above, and the buyers could be continuing to move up there to grab those stops. So now 50% of that bullish candle, let's just bring this red line up to there, about 50% right there. Now we're getting our red bar coming down on gold. This is a new 5-minute candle. It's 12:15, so this is a new 15-minute bar. Let's take a look at our 15s too across the board. So we still have that big bullish 15-minute candle. It just initially opened red. Our 15-minute candle is breaking the high. Okay, now we're filling up to the big red box. Okay, so now let's see if we kind of have like a rejection in here, if they push this down. Yep, NASDAQ is bullish, S&P is bullish, Dow is bullish right now, Russell is bullish. Gold is kind of consolidating in this bull flag right now. Still hasn't came into this red zone yet. Yeah, Dow wants that high of the day. High of the day is right there, guys. There's our purple line, sorry, right there. Exactly 40,650. Okay, and you see the 5-minute RSI is starting to get a little bit overbought. So we might have a reaction close to our daily high up there. They might squeeze it for a little bit more and then push it down, or it could touch the all-time high, or not the all-time high, the daily high, close above there and continue squeezing higher. Okay, we cannot just force a trade just because we think maybe it's time to hit the sell button. Same with gold. It came down red, 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 but did it break 50% there? No, it just came down, picked up another bid and coming right back up as a hammer. So that's why I really wanted to see how it will react in this big red box up here. And also if you're a buyer, okay, so this goes both ways. If you're a buyer and you're part of this big leg, you're in profit, same with gold, if you're part of this leg, then you also have to know about the other side of the trade, about taking some profit. You don't need to close your entire trade, the entire trade altogether, but you can maybe start to reward yourself for being on the right end of the trade and know that maybe it is approaching the daily high. It is getting a little bit overbought on the lower time frame, that maybe there will be a pullback. So maybe just start to reward yourself a little bit. That's another should be part of your plan when you're trading. Helps with your psychology when you know that you're securing some money, and that's ultimately how you compound your account over time and get it bigger and bigger and bigger, because you don't want to always get in the habit of giving unrealized gains back to the market. It happens to us a lot, but try and learn some type of discipline to either use a trailing stop loss while you're in profit, scale out a little bit, continue letting the trade breathe. It's up to you. But right now we're coming right up. We're going to tap into the daily high. Let's see if they're going to break it out a little further. And gold is still just kind of just consolidating right in this block here. Mike, you would think today was a big news day. Absolutely. I think it's just the excitement of the markets right now on anticipation of the rate cut, and a lot of positioning going for the long and going to break all-time highs. It could be that, maybe later this afternoon, that could be a little bit of slight pullback and a sell-off, but right now there's still a lot of bullish momentum. Tony, TP and left a runner. Perfect. Like you should be proud of that, like everybody. When you TP and you leave a runner, you did what you needed to do. As I hope some of you guys are like intraday traders, day traders, or you're in the market to make a profit, leave some runners, and then go on and enjoy your day. Unless you're swing trading, that's a different story. But same with swing trading. Some of you guys are swinging and you guys are up 500,000 pips. You should still be rewarding yourself along the road. You got to give yourself a little bit of a payday. You have to. You got to take some money out of these markets at some time. It helps with the psychology. Then you know that you got physical money in your pocket. You can use that money to pay your bills, to buy groceries, to put gas in your car. Then it hits different. Then you came in the markets, you hustled, you made your money, and now you can go buy some groceries this weekend and put some gas in the car. And it's just different. It feels different. You earn that money. Okay, so we technically just missed the daily high by maybe 1 point up there. Okay, so yes, it is overbought, but it could just come down and go right back up and keep us up there. Maybe we'll watch to see if some volume closes below here. Again, maybe we'll come back up, then they push it back down one more time. Gold is still bullish, but I still want to see what will happen when it triggers these pending orders right here. Okay, so if I take a sell on US 30, like if this is a bearish engulfing bar close down here, then I know that it might come down to a neckline and come right back up, and then maybe this will act as more ongoing supply and push it down. Then my stop would obviously be above the daily high somewhere around here. But I want to see if this red bar will close somewhere down in here and maybe start to engulf this green volume, because it's still really, really bullish. Look, it comes down and right back up. Look at gold. Now gold is coming through. Okay, so now it's triggering those pending orders that were in the market prior 9:55, just before 10 a.m. So, and those were a lot of sell side orders in here. That's where the market dropped. So now the buyers are coming right back in there. And right now it just got rejected, but let's judge how the body closes in the next 3 minutes. And then if it breaks and closes above here, we're not too far from the all-time high. So, there might be a ton of sell orders waiting at the all-time high up here at this purple line at 2,500, waiting to short gold down. but you got to be very careful doing that. Okay, so it came in green, 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 right into about 50% of our red block there and got pushed right back down. So will this turn into maybe a shooting star candle? Then maybe we look for that sell, or will it come back up and close? Okay, so but you see how the initial order filled some sell orders up there. And they pushed it down, but when it came down, the bids are still filling up. There's still a lot of traders bidding on gold, and then it's coming right back up to see if those sell orders are going to absorb or the buyers are going to overwhelm them and flip the block here. Okay, so I'm happy that I can show you this live, because I know some of you guys always have questions about how these kind of these blocks or fair value gaps work in the market. But do you understand why I'm telling you guys, like, this is sell side volume, that gap that hasn't been activated until now? Now they got more of those orders got activated, and they're absorbing the buyers currently because it got rejected. But we still have 90 seconds to go. But every time we come down, it keeps filling up with bids. So there's still a lot of bidding going on for gold. We're in a big pickle right now. Do we buy up here or do we wait to sell? This is like the most difficult part of trading, is do you continue to buy these highs of the day where things are overbought, or do we wait to possibly take a counter sell? It's very difficult. And also the US dollar is approaching a level of support very soon at around 102.63. Maybe there US dollar will bottom out, create some strength there on the dollar. And that's where maybe we'll see maybe a pullback come down on gold. Hey, good afternoon, Crypto LFS. Welcome. Okay, guys, so we got a closure. Again, it closed inverted hammer green volume. So we did initially get rejected. Okay, so it came in there, popped its head in there, got rejected. Now it might come right back in there, but the size of the wick, okay, it's a larger wick. So these buyers, they are ignited, coming right back in here. Will it get rejected with a lower high right here or below this wick and come back down? Or are they in fact going to take it right through here? And then maybe there's some bigger sell orders up here. We're getting our move down on US 30. Okay, I'm going to enter on US 30 on an impulse right now. Okay, so this is a 0.25 position. Okay, my initial position. And if I do get a pullback and maybe another push down, then I'll possibly go in with a second sell at 0.5. Okay, so my stop loss. Okay, there was the daily high around roughly 40,650. So maybe I kind of want to be let's say 670, 20 pips above today's daily high is my stop to give it room to breathe in case it rotates back up. And I'm going to look for a TP down to, remember that red line I was talking about? Right down there. So it's kind of like just a little over a 1-to-1 risk to reward. But with maybe more momentum to push down, maybe we can take this out and then naturally we come down to our green box and we can look for that move. Okay. So I'm currently in a sell on Dow. And I know that it could possibly come down like this, rotate back up, but then I'm looking for the closure of the body, because if it comes back up, then I'm looking for like a lower high, or maybe they rejected it right there and then push it back down with more sell volume, and then we can actually maybe break some physical structure and drop down to here. So I am counter trading Dow's high of the day. It is a risky trade, but that's why I'm not putting a large order in. For me, at 0.25%, I'm going to test this out. Okay, guys? So full transparency, I'm in a sell. My stop loss is 20 pips above the daily high. And gold came right through again, right in there, but we're still in this red box. Okay, so those orders are getting activated in there. We'll watch to see if gold closes above or if they'll continue to reject it out of this red box and maybe look to see if the move will come down here. Okay, 2 more minutes to go, but I want to watch this red candle. So I had this red line marked here from this body at 12:10 p.m. Eastern, 50% of it. Can we get red volume maybe penetrating and closing below this? Maybe we'll get maybe a continuation ignited red candle continuing to fall. But let's see how this plays out. Okay, so gold is still right inside here. Okay, so again, 1 more minute to go. It's a nice red body candle, but remember it's counter trading all of this green volume. So there is still possibly some bidding going on, but the actual close of this candle will be really important. If we can get this big red body candle to close below 50% of this, we could in fact get an ignited bar on our side pushed down, but you see how it's still holding right here. Okay, so there is support right here. That's why it could just come down there, form the neckline, buyers are there, and then they come back up. But then that's why we got to see maybe if more supply will enter and push the move down. So we're going to take it candle by candle. And then if it can get down there, we're looking about 50 pips. If it can get down to our target, if it can get down there. Okay, so here's the close in the next 10 seconds. And it's also 12:30 p.m. Eastern, so we're getting a new 30-minute candle in the market. Hopefully the momentum can maybe push down. So we didn't close below 50% there, but we still have this red body above us. So 50% of it is naturally right at the top of our red box, the bottom of that red box there. So we have an ignited red candle, okay, to push and break a little further. Gold got rejected. There it is. Rejected and rejected, now pushed down. So those orders were activated and they were sell side in this bearish fair value gap. Okay, so that doesn't mean that right away it's going to dump down. It came down, it might go back up. We need red volume on gold to start closing below maybe this physical consolidated box. But you see how it's still holding in here for sell side. Okay, so we're having a little difficulty breaking 50% of this body right here. So this is naturally the pullback coming right back up. So that's why maybe sellers need to start absorbing these buyers, absorb this pullback, and continue to push down. But this will be the critical area. If we can get some lower time frame volume to close below here, then we can technically have enough to push through here. Okay, see gold, it came right back down, but there's so much bidding on gold right now. It's coming right through here. So let's see for a third time. Will it get rejected in this box, or is gold now going to squeeze these sellers, and then you get, again, it will push right back up to the daily high, all-time high up here, 2,500. Okay, then just putting the pieces of the puzzle together. There was sellers there. There was sellers there. If this green candle breaks through here, you know that those sellers that are in here are getting squeezed out of the market. Okay, because where would their stop losses be? If you were to sell in here, your stop loss is probably up here by the all-time high. So if it keeps going through here and the buyers of gold keep bidding this up, bidding it up, bidding it up, it could go through here and start to move and attack these sellers with their stops in the market. And that will traditionally make the move go higher. But if it starts to get rejected again in there, then we know that this block is holding up. It's not allowing the buyers to get through here. I'm in the Dow sell. Yeah. Yeah, I entered in a Dow sell. Position 1, 0.25%, and then maybe the pullback, and then they drop it back down. I might enter again if it plays out, but I'm more focused if red volume will close below 40,615, right below here. Even a little small consolidation doji bar is welcome down here. Then maybe we're going to consolidate down here, form a little bit of a minor bearish flag, and then drop. So gold came through again, built a new higher high up there, but again rejected. Okay, so this red box is still holding. So when you start to locate these type of areas in the structure of the market, maybe will help you with your buys and your sells going forward. Okay, so it got rejected again. The volume closed in there. They gapped it up, so it looks like they want to take out those highs. This is possibly where they grab the liquidity now. I got my eyes on gold. I'm in the sell on Dow. It's in a little bit of drawdown right now. Okay, so it pushed down. We're still holding 50% of this bullish candle. So now it's going to come up to attempt to take out these, maybe a new high of the day. My stop loss is about 20 pips above the high of the day right here at 40,670. That's as much room as I'm going to give this trade to breathe for the time being. And if it does come up there, then unfortunately I will get stopped out of there. So just waiting for these candles to close. So a lot can go on, and we have 2 more minutes to go. Okay, so it did come up. They are pushing it down, lower high. Again, it will be nice if we can start to close with some red volume below here, so that maybe they've absorbed enough near the high of the day to redistribute it down here. But there's a lot of bidding going on in the market for everything. It's a tough day to look for sells right now. There's still lots of bidding going on. And so gold, it took 1 attempt, 2 attempts, 3 attempts. This is the 4th attempt that they're clearing this zone. Will it close green above here? Will they reject it back down in the next 90 seconds? So let's pay attention to gold. We got a good rejection on on US 30 where it came up. Now it's flipping back red, but the closure down here is going to be more important. Otherwise, it's just going to keep getting bid up here. Then we're going to come back up again. So I really want it to close below this structure down in here. Exactly why I took the sell around here, this blue area. Yeah, trend is definitely your friend today. I'm kind of just looking for maybe just a late afternoon, possibly a breakdown near the high of the day to drop this thing. But I know I said, guys, it's a risky trade. But I'm going to play it out, see how everything develops. Gold is still bullish, broke through this area. So now it's showing me that this area where the sellers initially were, they got overwhelmed by the bids. But it came up there. Maybe now they took out the liquidity and now maybe they'll slam it down. So remember, we judge at the end of 25 seconds when the body closes. Okay, so here's the close. Still bullish, green volume. So next bar, be prepared. Could open green and come back up. They gapped it down a little bit, red. Maybe just come down, pick up some more bids and come right back up. Gold, okay, broke out of there. We're still trading kind of in this red zone in here. So ideally, guys, just so you guys are on the same page with me, what I'm looking for is this move that came up, came back down. If it comes right back up, I'm looking for some rejections, excuse me, some rejections anywhere in here to continue to push it down and close below here. And then obviously it might come back up and then the real redistribution down to here. But there's too much bidding going on currently on both of these, on gold and Dow. Yep, Mike, take care. Holy Friday afternoons. Friday afternoon, boring volume. Okay, so gold still is inside here. Attempted to come up, lower high, tweezer top highs. If we get a red engulfing bar come below here, we could see a slight pullback on gold. We've got this doji candle just trading right in the middle right here. Let's see if we can get some sellers start penetrating down in here with some volume. We need volume. And then the thing that sucks, guys, it happens to me, just like probably you guys. If it comes up here and kind of takes the stop loss out, and then you see it go back down, it sucks when it happens. It's happened to me. It's probably happened to you guys too. But that doesn't mean that you just kind of will revenge trade right after. Again, I just follow the structure. So if I do get stopped out and then it does come back down, I'm still targeting this area for a sell. But this trade didn't develop with the time I gave it, and then the market came up there. Maybe then I see it took out my stop, but maybe grabbed the liquidity up there as well, and then maybe reversed again. And then if it came back down with more supply, yes, I got stopped out, but then maybe it doesn't. I can get an opportunity to enter with more supply coming down. But I kind of don't want to give it more room than that, because if it stops there and comes down here and then retests this, and then it continues to break and then go higher, then I'm in trouble. So that's why I start off with a 0.25% to start off a trade, and then if it starts to go down with the momentum that I want, then I start to add on the position, maybe a 0.5, or if I do get stopped out and then it goes where I intended it to go to, then I'll add a 0.5 here, still within my risk, and then maybe I can make up that 0.25% that I lost and go down with some momentum and then make a little bit back. But it's kind of adjusting your lot sizing according to, are you trading with the trend? Are you countering the trend? Where are you trading at? Is it the high of the day, the low of the day? Are you at a critical level? Are you just going to scale in slowly and feel the trade out, and before you go in? Okay, so gold is still trading inside here, still red. We hit the daily high again on US 30. So let's see now, maybe 2 times at the daily high, tweezer top highs. Are they going to pull it down now on this new 15-minute candle at 12:45? Okay, so it's a nice red bar, but again, I don't want to get too excited because I know that there's still 3 minutes and 50 seconds on it. Is it just going to come back down to where all of these wicks are and then go back up, or are they actually going to push it down and get a nice closure below here? I need this red body to close below this red box. Otherwise, it was a beautiful candle the way how it opened and came down, but then it's getting bid right back up, like similar like gold. So we got to kind of follow through and close below here so that it can maybe get that higher time frame redistribution. See, like that took a lot of our momentum away. See how it opened, came down red all the way down there. It was looking good, like a nice bearish engulfing candle, but that was just the first 2 minutes. And it picked up a bid and coming right back up to test up here. So it could break the daily high, and my stop is right there at 40,670, 20 pips above the daily high. That's the most room I'm going to give it to breathe above the daily high. And guys, when I set a level, I set it and I forget it. I don't alter this. I don't, if it's coming up there, then I say to myself, oh, I'm going to give it 10 more pips, then another 20, and then just keep going that. Kind of when I set it, it is what it is. Kind of, that's just for me. It's either going to go down here or it's going to kind of tag me out up here. So it's just, I try and give it enough room to breathe. I sometimes I hope that the trades don't go into drawdown. I hope sometimes when I take them that they actually go right into profit. But it all depends. Are you looking for a bigger move? Are you just looking for a single bar scalp like this where I entered? It just went into 10-15 pip profit. But obviously I'm looking for the bigger move. So again, it came back up. They held it where it opened. It's coming back down. But every time we come down in here, it's getting bid right back up. So in 90 seconds, will show us who will win the war of this candle, the buyers or the sellers. So it looks like we're going to get a new daily high. Yeah, so it flipped into a hammer. So we're breaking that high, the new high of the day. So how far high is it going to go? We got 40 seconds. So this is where it could drive, possibly stop out everyone up here, including myself. It could possibly come back down. But this is the opposite of the candle that I want. I don't want a hammer going again on a sell. And then if it closes above the daily high, again, then this can turn into a full area of demand and pull back and retest this. And then now it's flooded with buy orders and continuing to drive for a new daily high. Okay, so it did close above there. And now when it comes down, it's probably going to retest all the buyers here. But it closed near the high and it's possibly an ignited candle ready to drive. So I'm getting very close to getting stopped out. I'm only about 10 pips away. Ideally, I'd like to stay alive in this trade going into 1 p.m. because maybe they're just coming to target all of this liquidity up here before the end of this hourly candle, and then maybe 1 p.m. maybe start to redistribute it down. So I'm just trying to hang in there before the close of this hour and see how the next hour opens up. Yeah, Miss Jones is not cooperating today with me. And gold, guys, it's still in this red gap zone. Okay, there was a couple attempts to break out. Impulse, impulse, impulse. So we're still going to watch. If there is still the battle in here. Gold hasn't physically closed kind of above here to continue to go to the all-time high. So we'll see if it continues to maybe push below here this afternoon. Yeah, that's the worst retest and coming up. So I'm possibly going to get stopped out unless a big sell order comes in right now at the high of the day and absorbs this and pushes it down. That's a good push on gold to go to the downside. But again, every time it comes down, going back up. So maybe physically wait for a closure. Yeah, gold is a little choppy right now. And just heads up, gold COMEX closes at 1:30 p.m. Eastern. So just heads up there, possibly getting stopped out of here. Okay, at 670. Okay, so I'm stopped out of this trade. That's the stop loss. So now what I do is I'll put a alert back down in here, right here at this 618. If it comes back down there this afternoon, I will be watching that if I'm still in the markets. Okay, guys, I apologize about that, but it happens. I got stopped out of that trade. The markets are continuing to be bullish going into possibly 1 p.m. and then judge what's going to happen at 1. Yeah, it's tough. That's why if you're countering, just go in a little smaller and test it out. It wasn't there, so you can. That's one way. I don't know how to tell you, but to minimize your loss, that one I took was with 0.25%. Normally I trade 0.5%, but that one I reduced my risk by half. I got stopped out. Tried. It was moving down that bar, but then when it started this leg up, it didn't hold at the high of the day and continued to squeeze out of here. It's strong. Yeah, and gold. Okay, so we finally got the move above here now. So again, just flipping these, and I guess trading with the trend is the best thing to do right now. But and guys, don't revenge trade, things like that. If you get stopped out on a trade, that doesn't mean that you just go in and you're pissed off and start slamming trades. Again, recover, regain your composure, and just continue to watch. But that's going to be it for me. I was going to stay longer if this trade was still developing, but guys, we'll stick together for in just after 1 p.m. And then I'm going to call it a day here in the markets. But let's just see how it closes going into 1 p.m. with gold and Dow. One thing to just keep an eye on if you guys are going to continue to trade this afternoon, US dollars are reaching a critical level of support, the US dollar, and gold is at a very critical level. It's just 50 points away from the all-time high. So now just above the daily where we're moving, guys, just to go, I'm just going to go full chart on US 30, okay, because we're breaking above the daily high right now, pushing up to 40,700. Just go to higher time frame so you can see maybe some structure. So this is the hourly candle that's breaking out of the daily high, and right over here, you see here where there's some structure right here, where it came up there, back down, came up there, back down, came up back, and then they pushed it down. So if I just kind of place like a white line right around here, it's exactly where we are right now. Okay, so that's the previous hourly resistance right there. If it tends to drive a little further, your next zone I would be watching is right around here. Right here. Get as many, again, touches as you can. That wick touches, that wick touches, these bodies touch right there, wicks right there, wicks right there, a wick right there, bodies right there, and a wick right there. So those are kind of your next zones. 40,712, exactly where we are right now. Next one would be 40,770, and hourly, and then the next daily yellow line is 40,860 if it continues to push up there. And then if you're on the 5 minutes, that's where they are. There's the white line we're at right now. There's the next one above, and then there's our daily yellow line. So this is now, the previous high of the day is now, could be support. So if it pulls back, if it comes down red, there could be big buyers waiting again to take it back up. So just one of those days where it's continuing to squeeze out of here. It is 1 p.m. Things might change at 2 p.m., at 3 p.m. power hour, then it might be slight sell-off, or it could just continue squeezing. So these are kind of one of those days that are those trap days. And I've been part of these, as probably most of you guys have too, where we keep telling ourselves, man, it needs to sell. It needs to sell. And then we keep telling ourselves that, and then we keep trying to short the market, and then it just keeps squeezing higher and higher and higher, and then we keep getting tapped out on our stop loss. So it could be one of those trap days. For if you're a buyer, it's fantastic. But if you're trying to sell this, it could get very, very frustrating. So that's why, guys, if you're looking to sell either gold or any one of these indices, just what I would recommend is just starting off small and feeling it out, because if it keeps driving up, then you can maybe get stopped out and it's not as much of a loss. That's all I can basically recommend. Otherwise, if you don't nail it like exactly, like us, I hit that one right there with the sell, but then it came right back up. If it did come up here and then rejected, yes, then it probably we would have moved, but the market didn't allow it there. There could be another opportunity, but just be careful. And don't give away most of your daily or weekly or monthly profits just to prove yourself that the market needs to sell down. Sometimes it doesn't. And then we make some more critical mistakes, and then we end up looking back at it and saying we screwed up. Why did we do that? So just be careful, guys. Same with gold. It's not ready to sell yet. It might be developing for later this afternoon, but not right now. It could just pull back and continue driving. These can just continue to pull back and continue driving. And everyone on Zoom, I just got a message over here. So this weekend, the site will be down for the new upgrade. And if you guys stick around just before I end this call, then I'll just mention to you what's going on with the website this weekend. So just stick around for a few minutes, and then I'll tell you guys what's going on with the website. And guys, everyone on YouTube, I had a great week. We traded Monday, Tuesday, Wednesday, Thursday, Friday this week. It was fun. We'll be back next week again. Next week we might be going more into the Tokyo sessions and getting back on a little bit of education and things like that. And we'll switch it up a little bit, okay? And everyone, I just want to say thanks for joining this week, and I hope you guys all have a fantastic weekend, and we'll see you guys Monday. And if you guys are looking to join Stock Sniper Trading, please visit the website, stocksnipertrading.com, and also join this free Telegram group that's pinned at the top of the YouTube channel for you guys. And everyone on YouTube, thank you guys. We'll see you guys next week. And everyone on Zoom, if you can just wait like 2 minutes, and then I'll just get right back to you guys, okay? Thank you guys. Have a good weekend, everyone. God bless. Enjoy your weekend with family, and we'll see you guys next week. Thank you.